Hey, Urs, thanks for sitting down with me today. I'm excited to talk about inflation and what we're seeing in the US economy. The US inflation has actually ticked up to 3.7%. Are you surprised by that in any way?
No, not at all. Because uh, what a lot of people did not talk about is that in June, yes, it was down, but you have to be aware of how inflation is calculated. So it's over a 12-month period where it is compared to. And last year, 2022, in June, inflation was at an all-time high. So the basis where it came from was already quite high. So it did make sense that inflation compared over a 12-month period lowered, but the general trend has not been broken yet.
Wow, that's very interesting to see. Do you think that this little uptick, I guess, as you're discussing the basis effect, uh, that we're not seeing the trend continue to go down was the Fed's lack of action in raising interest rates in the past couple, because of the past couple meetings that they've had?
Um, I don't think so. I think the lack of action was at the very beginning, and so now they're paying the price for that. And I think it does make sense that the Fed, every now and then, every national bank, takes a step back and sees, okay, how do our actions from the past, what are the consequences? And to be honest, I don't really like the monthly meetings of national banks. I think it's way too high of a frequency. So, for example, in Switzerland, the national bank uh, communicates their interest decision every quarter. And so I think that makes more sense because it actually gives the economy some time to react to the decisions which were made in the last meeting. And if you have it every month, then it's like once a decision is made, you already have to adjust for the next one.
That's very interesting. Going along those lines of inflation, we've seen inflation high now in the U.S. for at least 2 years. Um, can you explain how inflation affects the wealth or the hard-earned wealth of Americans?
Yes, I mean that's very easy to explain. I mean, today you cannot afford the same amount of products and services as you could 2 years ago for the same price. So 1,000 US dollar today are worth less than they were 2 years ago. And that brings me to another point, which is always underestimated. Yeah, we talk about like inflation is up 3%, 4%, 5%, but the accumulated inflation, going back to 2020, like over the last 3.5 years, were about 18%. And that really takes away a lot of purchasing power which you used to have in the past. And that's also the reason why it is so important to position your wealth and your portfolio in a long-term perspective. Because once inflation hits, we could see it the last 2 years, there is not much you can do to fight it.
Wow, that's an incredible figure to understand. When you had mentioned the Swiss bank or the Swiss National Bank and how they make their interest decisions, in Switzerland we currently see inflation at 1.5%. Why is it that Switzerland was able to get their inflation in check, and why didn't they have the same inflationary pressures that many of the Western countries have over the past couple of years?
I think one point is for sure the credibility of the Swiss system and in particular its currency. So the Swiss franc has been very strong the last 2 years, and over the longer period already there was a trend in a strengthening currency from a Swiss perspective. And the national bank had to fight this strength because it did hurt our industry which were exporting a lot of products. And so due to this situation, they accumulated a lot of foreign currencies, which they now can use to sell and to buy back Swiss francs, which will strengthen the Swiss franc, which eventually will lower inflation, which we import. And that is also what was announced from the Swiss National Bank in its last meeting about the inflation, that the inflation pressure which we have in Switzerland is mainly or is mainly driven by like national companies, national service providers, and less so by imported products.